What's going on, everybody? Tyrell here. If you like crypto, on this channel I bring together the fundamentals and the technicals to curate valuable information to help you on your journey. A free way to support this channel is to like, comment, and subscribe. It really helps me out. And I wanted to remind you guys, as soon as we hit that next milestone of 1,000 subscribers, I am giving away $1,000 to givecrypto.org. So if you guys haven't already subscribed, make sure to subscribe so we can give crypto to people in need. So I know it's been a minute, so let's get right into it. Looking at the total crypto market cap, we're currently sitting at $1.71 trillion. Let's actually zoom out a little bit on the weekly, and we can see that there has been 3 consecutive weeks of bullish momentum in the entire crypto market place. So I view that as a bullish signal. This isn't financial advice, this is solely my opinion. So in my opinion, I think that there's going to be more money flowing into the crypto market. Looking at the altcoin market, total to excluding Bitcoin, we're currently sitting at $903 billion, just below that $1 trillion mark. So we may stay range bound for altcoins. If we can see more money going into the altcoin market, such as like Ethereum and all the other altcoins excluding Bitcoin, we could potentially see this thing go above $1 trillion and then just go from there. All right, looking at Bitcoin dominance, we're currently sitting at 47.27%. And let's look at Bitcoin's price. So this is a gauge for the rest of the crypto market. We can see the 3 consecutive bullish candles. This is a brand new week, brand new energy, and let's just bring it. We can see that we were in this accumulation zone, and then on the 21st, following the B word event with Elon Musk, Jack Dorsey, and Cathie Wood, there has been renewed interest in purchasing Bitcoin and cryptocurrencies. So the sentiment around the crypto space improved following that event, and we can see that on the charts here. Like there was a bullish engulfing, and then 2 consecutive bullish candles, and here's where we are today. So let's drill in a little bit deeper into the day. I think, in my opinion, that we may retest this 42,000 resistance, now turn support level, and then continue on to potentially $50,000, which is a nice round psychological level. So as I've said numerous times, I was just accumulating here. I held on, and it paid off. So the value of my holdings increased. Looking at Ethereum now, we hit that high of $3,173, and now we are currently sitting at $2,917. And there's been a really cool development with Ethereum. The London hard fork was just implemented in the Ethereum blockchain. So now every time there is a transaction on the Ethereum blockchain, some ETH is burned, and that in turn creates a scenario where Ethereum now turns into a deflationary asset, which in turn causes the price to appreciate. So if more and more people continue to transact on the Ethereum blockchain, then more and more Ethereum is going to be burned, and there's already been thousands of Ethereum burned already. So pretty cool things happening. Right now we may see this thing retest, continue on. I don't know, time will tell. All right, let's get into the Bitcoin hash rate. I honestly believe that the Bitcoin hash rate is the leading indicator, or like the most direct indicator to Bitcoin's price. So you can take the Bitcoin hash rate plus all the like fundamentals that are happening out there in the crypto economy, such as like the B word event or any other thing that could potentially affect cryptocurrency prices. But this technical indicator, you can see how many miners are competing for that Bitcoin block reward. So we can see that there was a decrease in the hash rate following the events in China where they have essentially banned mining in China, and these new miners are beginning to set up operations in different geographic areas where electricity is low and the government in charge of that country is more helpful towards Bitcoin mining. So as more and more Bitcoin mining operations come online, we can potentially see the hash rate increase. Plus, other countries such as like the United States start to expand their operations, and other geographic areas set up their operations, and we can potentially see this hash rate increase much higher than what the previous all-time highs were. So we'll see how that plays out in time, but I do believe that hash rate is one of the best indicators of gauging the Bitcoin price. Next is the stock to flow model. A lot of like technical analysts and commentators reference the stock to flow model. I do as well. I think it's a really good model, and we can see that there's a lot of room to grow for the Bitcoin price. So we can see each of these dots is like a price point in time, and we're currently sitting at 43,240. And according to the stock to flow model, it should currently be around $80,000. So this may be a lot of free space for Bitcoin to grow into to get to that point where this model essentially estimates or guesstimates where the Bitcoin price should be. And I think it's a good target to get to that point. And then if it does get to that point sometime this year, that'll be good for a lot of people. So hopefully it does get up there. But yeah, stock to flow model. And lastly, there's been an amendment proposed in the infrastructure bill, which I think is really good for like America's infrastructure. It's gonna like improve roads, telecommunications, healthcare, and all that other stuff. But there is a part within the infrastructure bill where tax reporting obligations could negatively impact cryptocurrencies, particularly proof of stake cryptocurrencies, where how could I explain this as succinctly as possible? It's going to require like hardware providers and blockchain developers and DeFi protocol developers to like capture customer information and then provide that to like the IRS and stuff like that, where that's essentially impossible because blockchains aren't designed to capture KYC information, know your customers, such as like first name and last name, your social security, your address, and all this other stuff, to report that to the IRS for like gains or losses. That should essentially be narrowly defined to brokers such as like Coinbase, Binance, or Kraken, where they already have that information. And by signing into law the infrastructure bill as it is right now, it's going to cause a lot of developers to go overseas and not want to develop within America because they can't necessarily follow these rules because it's impossible. Like, it's just going to constrict all the developments that are going to happen within the cryptocurrency space, and it's going to put America at a disadvantage. Whereas if we like urge our senators to vote for the Wyden-Lummis-Toomey amendment for the infrastructure bill, then the definition of brokers are going to be more narrowly defined to institutions and corporations that already have that ability built in to do so. So there's a lot of support within the crypto community, like Brian Armstrong. You got Jesse Powell here, and you also got Elon Musk, where he's urging lawmakers to not pick winners and losers and just allow the crypto economy to develop as it is right now, in its own like little incubator space. And it would make the entire crypto space stronger in the long run. So there's a lot of support within the crypto space for the Wyden-Lummis and Toomey amendment. So I will leave a link in the video description if you are in the US to urge your senator to vote for that amendment that is better for the crypto space as a whole. So a lot of eyes are on this right now, just to see how the infrastructure bill is going to play out. As a whole, I think the infrastructure bill is really good. It's going to make America more competitive, to improve a lot of things, and then put money towards projects that would, improve our infrastructure and make it like modern and whatnot. But as of right now, it's not looking too good for the crypto space, because it's going to impede development and then potentially force a lot of crypto and blockchain development to go overseas to other countries that are more conducive and helpful towards blockchain development. So we'll just see how this thing plays out. So once again, this is Tyrell. Please make sure to like, comment, and subscribe so we can hit that next milestone and give some money to givecrypto.org. All right, I'll catch you on the next one. Peace.